What about you? How long you been in this? Actually, we'll get into it.
Yeah,
Because
go
I
ahead.
like good stuff. We're back on another first time, Jake. Forgive me.
To whoever may need this nugget of encouragement, things will be alright, so quit your worrying. I get it, the odds seem stacked back against the wall, but even consider it such, no, you'll stand tall.
We're back on another episode of Slim from Friends, where we bring on dope people that do dope stuff. Now, today's guy, you may, I would say he does things outside of the norm of what mortgage does. And from content as a whole, mortgage, money is dope, but the concept of what I've currently seen dealing with mortgage isn't like a super sexy topic. And this guy's kind of changed the wave over in Saline County. You would think he's from LA or hanging out with Ryan Serhant on how he pushes this stuff. But I'll let him tell a little bit about you. So for today's guest is Jake with not State Farm.
Verity Mortgage.
Yeah, there you go.
Yep.
So thank you for being here today, Jake.
Yeah, man. Thanks for having me.
Absolutely. So, Jake, before we get into it, what do you actually do? Because people would think just based off your videos, oh, this guy just a content creator that just happens to be in mortgage.
Right. So we help clients buy houses. We help clients refinance houses, whether it's their first house, their second house, or their last. You know, we help people put debt on real estate
Okay.
for a variety of purposes.
I like how you made that. Is that one of the mantras you use, debt on real estate?
I actually just came up with that, but it
Right on
sounded
the
good,
spot.
didn't it? Yeah.
That was
Yeah.
good. So, how long you been in this space?
So I've been in mortgage since 2013.
So before that, I'm assuming, I hate to assume, but before that, let's just look at that 2008 bubble. Did you have a home during that time as well?
Yeah. So graduated high school in 2006, went to UCA, studied finance and Spanish, studied abroad in Mexico for a little bit. I got out of UCA and I was a bond broker for 3 years, which is where interest rates come from, right? From the bond market. So I did that for 3 years and at some point decided, man, I don't really want to do this anymore. And I looked into real estate. I almost became a realtor. I actually almost went to work at State Farm.
Dang, okay.
I almost was Jake from State Farm. Missed that boat. My mom, who's a local realtor, she connected me with her mortgage person and said, man, my mortgage guy thinks you'd be a really good fit in the mortgage business because of your finance background, bond market background. And so I got into that in 2013. Took a little bit of a slow start to get it off the ground, and we found some momentum, and I've stuck with it.
Is that because does mortgage deal the same with any sales type of biz? You have to build up your...
That's right. Just like realtors, it takes a couple of years to get off the ground or any other business. You have to learn what it is you're doing and talking about to be able to then go out and confidently try to pull in the business. And then over time, you're planting seeds. You're doing loans for people and they send you people and then they send you people. And over time, you know, your referral network and your referral base grow so that, you know, you can have more of a business.
Gotcha. So if they're like, hey, yeah, go talk to Jake. Jake did my XYZ. And is it as simple as that? Jake does the thing, or do you handle more so X, Y, and Z? Like, what is it all that you handle?
Yeah, sure. So a good example might be, let's say you want to buy your first house. And let's say you contact your realtor and your realtor says, have you been pre-approved yet? Do you know what your financing is going to look like? No, I don't have an idea yet. Great. Call my guy, Jake. From there, we're going to take an application from you. We're going to get you pre-approved, measure twice, cut once, right?
Okay.
Make sure that we can get you qualified, credit, income, down payment scenarios, whatever that looks like. From there, we go look at houses. When you find the house and you have a house under contract, we then finish up our paperwork and we handle that start to finish, you know, kind of your tour guide. I'll hold your hand all the way to the end from, hey, what does buying a house look like all the way to got the keys in my hand.
Gotcha. Do you also assist with the side of it? Because you mentioned debt on real estate. Let's say somebody think they want to go get a rental property. Do you assist in those elements of it as well?
Absolutely. Yep.
Okay.
Yep. To buy a rental property, maybe you already have one and you want to pull some liquidity out. You want to pull some cash out of it. You know, maybe you want to build a house.
Yeah.
We can help through that entire process. So really financing anything real estate related that has a house on it or will have a house on it, we can handle that.
Bet. Now we got all that stuff out the way. Jake, we're going to get into the questions that people actually want to know about. I'm going to go ahead and play devil's advocate on my side. Jake, somebody talked to their agent and they said, hey, you should buy a house now. Agent said, well, are you ready? They say, yeah. Or then they just go retroactive and be like, no, actually, I'm going to wait till the interest rates go down. Now, with me asking agents that question, they obviously give me the disclaimer, hey, I'm not a loan officer, but you are. So you, you can talk on this. What are people even thinking? Can you kind of give backstory on maybe why people are now going to that as being the objective, and maybe what should folks consider?
Well, it's a good question, and there's a long answer to that. But, people have been waiting on rates to go down since 2022.
Okay.
We're 3 years into that endeavor, right? So the hard part is the crystal ball of when will rates go down? How much are they going to go down? And the magic question is, what rate are you waiting on?
Yeah. Okay.
Right? So, okay, let's say rates are at 6.5 today. At what rate do you want to buy a house? Most people don't know the answer to that question. Most people don't have an answer to that question. And then let's look at what's the difference, right? So let's say you buy a house now at a 6.5 rate. If you wait and you find a house and you get it at 5.5 rate, you're going to save, I don't know, $60 a month,
That's
$80 a month. But you've paid $1,500 in rent for a whole ass year waiting on it to come.
For the
Or
half.
in some cases, you've been waiting since 2022, right? So now you've paid
all that rent.
30 something grand in rent to save $80 a month.
Man.
So waiting on rates to come down is a common objection, but I think it is most commonly used as an excuse. And I think it comes honestly from ignorance and from people not knowing what that entails, right? We're not going to see a 3% rate anytime soon. We're not going to see a 4% rate anytime soon, in my opinion.
Yeah.
Now, the next part of that answer is interest rates came down during COVID, right? And we'll talk about where rates come from, et cetera, if you want to later. But interest rates came down during COVID. Now, what happened in the real estate market when rates came down? Everybody went out and bought a house. So that's supply and demand. So what happens when all these buyers go to buy the same houses, it jacks up prices, right? Okay, so great. So now you're getting a little bit of a lower rate, but you're paying a higher price for the house.
God, it's a double-edged sword. Like, hey, which one do you want? You want the high house rate, or the high house dollar amount, or the low interest, or the high interest and low house?
That's right. That's right. You're gonna pay for it. You're either gonna pay a little bit of a higher price, or you're gonna carry a little bit of a higher rate. Now, the devil's advocate for me, I would say, find the house you want to buy that's affordable for you. Take the rate you can get now. When rates come down, we can do a refinance. We can fix the rate.
Okay.
Right? If you wait to buy a house until rates come down, you're going to pay a higher price.
Okay.
Right? So buy a house now, refinance it later. Ultimately, I think that's the best solution.
Yeah.
This kind of goes back to there's no perfect time to X. There's no perfect time to have a kid.
Yeah.
There's no perfect time to get married, right? You have to do those things on your own timeline. You can't let your parents or your grandparents or your neighbor or coworker say, oh, you should wait on rates to come down. The market's going to crash.
Yeah.
Oh, everybody's been holding their breath for that to happen for a long time. And listen, the market's made me a liar time and time again. I've thought we were 12 months from rates coming down for 36 months now.
Yeah. Okay.
and I'm an expert.
Yeah.
Right. Anybody that says they know what's going to happen and when is full of shit.
Yeah. When it comes to being able to, let's just say, make that decision. All right, I'm ready to buy a house. I tell my homies that are, I'm 30. So I tell my homies in my sphere that's spending, let's say, $1,800 on rent. And now, unless they are in the military and they're planning on moving every 2.5, 3 years, then I oftentimes suggest that they buy a house. Is that correct? Should I do that based off that, or are there other questions I need to be asking?
There's always a few other questions to ask, but the main question is, how long can you expect to be here?
Okay.
Right? If you can plan to be in a house for 2 to 3 years or longer, you're going to come out ahead, or you're at least going to break even on it.
Okay.
Right? So here's the other side of that equation. Let's say you're going to rent for 2 years at, let's call it $1,000 a month, which is unobtainable.
Yeah.
You're going to spend $24,000 in rent. Okay. So if we compare purchasing a house, either you lose 24 grand in rent Or maybe you buy a house and you break even when you sell it. Well, you at least haven't lost $24,000 in rent, right? Hell, you can buy a house and lose $5,000 when you sell it, still come out $19,000 ahead.
I like that perspective.
Right?
Yeah.
So we need to look at how long are you going to be here. Ultimately, 2 to 3 years, you can break even on a house. The longer, the better.
Gotcha.
Right? If you're going to move next year, probably don't buy a house.
Okay.
Now, listen, I've been in mortgage for, I got into mortgage in 2013. I bought my first house in 2016.
Okay.
So if you do the math, I'm doing mortgage loans for people for a handful of years before I even had one.
Right.
Renting has its pros and cons. I wasn't sure where I wanted to live. I wasn't sure what kind of house I wanted to buy. I wasn't confident in my income.
Yeah.
When I learned the answers to those questions, I realized, okay, I can step out and buy a house now.
Absolutely.
Right? So everybody's kind of on their own timeline, but the number one question is how long can you expect to be there? And then also, can you afford it?
Yeah.
Right?
And that's where y'all come in to actually do that debt to income ratio. Okay. Okay. Now, with there being so many options on being able to do mortgage, whether you see the big box and then you have your local folks, and obviously you want to go with someone that you just feel comfortable with, whether because they see your content or just because you're seeing a brand all the time. Oftentimes we do that one or the other. We don't necessarily know the value in going with a big box or the cons of going with a big box, but we also don't know the cons, the pros going with somebody that's in our backyard.
Sure.
How do you have somebody like what do you have folks that kind of sell you or you selling to people in regards of this is why I'm the shit, this is why you come to us.
Yeah. Listen, accountability is number one, first of all. So if you work with a big box lender and they mess something up for you, you can't find them, right? They don't care. They are not concerned about putting you in the best program and putting you in the best financial situation.
Yeah.
I'm going to run into these people at Kroger every Sunday, right? Their realtor knows how to get in touch with me and they will as well. Yeah. So accountability and reputation are really the two primary factors. Those are the main reasons that I want to do a good job for these people, right? Because I can't outrun doing a bad job, right?
What is that the mantra like you can do a million good things, but the minute you do the bad, that's the one that's
right.
Actually sticks.
When you buy a house and you get a mortgage loan, most 95% of lenders are all going to play by the same rules. We're all going to have the same loan programs.
Gotcha.
A VA loan is a VA loan.
Yeah.
Right? We do it. Rocket does it. Wells Fargo does it. Bank of America does it. The difference is who can best guide you through that process, make you comfortable, answer the questions that you have on a Friday night at 9:00, right?
Right.
Get you the best rate and put together the best overall solution and outcome for this. Can you call Veterans United or USAA and get a VA loan from them? Sure, you can. And in a lot of cases, they do a decent job at it, right? But they're not going to be able to answer the questions for you. They're not going to know the local market. They're not going to know the local guidelines, the local appraisers. They're not going to know that's not a great street. You know what I mean?
Yeah.
They don't know the Saline County tax assessor to help get your 100% DAV letter on the fly when we need it. Yeah. There's a lot of factors that go into this. You can get a VA loan anywhere, but the ease of that process and then knowing how to finagle things and make this the best outcome is what we're here for. And also getting your offer accepted is half the battle. If you have a pre-approval letter, them? I'm not accepting them, but the listing agent is helping the seller decide what offer to accept. And one of the things they're looking at is who's the lender, right? If it's a reputable lender that's known to do a good job, we're going to have a leg up over somebody else that's with a lender that is known to not do a good job, right? And also maybe we can call them or text them and say, hey, Amanda, this is a great file. VA looks great. Single dad, blah, blah, blah. Great looking file. Yeah. We'll get it to the table on time or early. Having that extra little bit of confidence in the lender helps the listing agent know that we're going to get that loan to the table.
What's making a mortgage, MLO, mortgage loan? What's making an MLO bad? Because I mean, obviously you got a good rep around here, but what are some things that folks should be looking at to be like, oh man? And the texting piece is huge. I know when we end up refinancing to get our 225 soft flex, that was huge to be able to just text, my guy and be like, hey, bro, what does this even mean? Why am I signing this? But what are some things people can look out to see if someone's actually not the best?
Sure. I would say, trust your gut, right? If you have a hard time getting a hold of the guy or the girl, if you can't reach them in a timely manner, that's an indication that they might not be the best person to work with, right? And then B, and this is hard for homeowners to judge or for clients to judge, but knowledge is everything, right? It is our job to make sure that we do this properly and that we foresee problems that could come up and sidestep them, work through them, or work around them before they even happen, right? So being able to properly communicate with somebody and then being able to foresee the problems and fix those on the fly,
got you.
that's where our money's made. Yeah. That's what makes a decent LO or a great LO.
You said a decent versus great, and that's huge. Yeah, that's huge. Now, because I don't understand this, the only loan type I know are VA home loans. One of the things that people, I was talking to a guy named Marquise Lovelace, another agent, and he was telling me about, if you're out in Saline, maybe something to consider is a USDA.
Yep.
I only think of beef when I hear that. Maybe I'm using the wrong letters, but
no, it's the same. It's the same stuff.
Oh, dang.
Right?
Okay.
Same organization. Why they do home loans and cows, I'll never know.
Okay.
But yeah.
So what is that? And he was like, it's land that you get, or rural, I guess is the word. So what exactly is that?
So a USDA rural development loan is a loan that is eligible for home buyers, families that earn less than the RD income limit.
Okay.
Now that's the first thing. The income limit right now for a family of four is like $118,000.
Got to earn more?
Less.
Okay.
Kind of like a scholarship.
Okay.
Right? If you earn more than $118,000 a year as a household, you are not eligible for that. So you have to be under $118,000 a year.
Okay.
The second thing is we have to be in an RD eligible area. Now that changes over time because population changes.
Right.
City limits of Little Rock is not eligible
at all.
At all. City limits of Bryant and the city limits of Benton are no longer eligible.
Dang.
So we have to go out Highway 10, Alexander, Mableville, outskirts of Bryant,
Haskell.
outskirts of Benton, Haskell, Malvern, Mayflower, Lone Oak area, Austin. You have to kind of go out a little bit to find houses that are eligible for those.
Okay.
That's a great program. We've done a ton of RD loans in my career. Yeah. Now, on a nerd moment real quick.
Here we go.
USDA has restricted the guidelines in the last 2 years. So I used to do 2 to 3 RD loans a month. I did 2 RD loans all year last year.
Dang.
In total. And I've done 1 RD loan all year this year. That's not for lack of effort. And it's not for lack of people calling me, asking me to do those loan types. It's just a harder loan to get approved right now. For whatever reason, USDA is more picky today than they have been in the last couple of years.
Dang. Okay. I want to ask you a question more so for my military side of folks. So let's say a military couple, obviously, we get our pre-approval being, or the approval saying, yes, you qualify for VA, whatever. So I got that.
Certificate of eligibility.
There we go. Yes. And then you have a partner. Is this a great strategy? Use my VA to buy the home. Don't use the partner's first time housing, whatever the thing. I'll let you explain that piece. And then let's say I'm going to sell this house. Then I get another VA because maybe I did the 1-for-1 swap and I'm on another one. But let's say I found my forever house. Could I use this strategy to now maybe use my partner's first time home buyers thing to get my forever home?
Okay, good question. Let me circle back real quick. USDA is a 0% down loan program. That's why it's popular. That's why Keith brought that up. It's a 0% down program. Okay. Everybody's looking for a no money out of pocket.
I got to bring nothing to the table.
That's right. So it's hard to get, but if you can get it, it's a great option to look at. Okay. All right. So VA versus first-time home buyer. I get the question a lot of, I want to use the first-time home buyer program. There's not the first-time home buyer program, right?
Okay.
There is no such thing.
Okay.
A first-time home buyer is defined as somebody that has not owned a home in the last 3 years.
That's it.
Boom.
Okay.
It's a checkbox.
Okay.
Now, there are some programs that are only eligible for people that are first-time home buyers. This would allow them to borrow the money to pay for their down payment on more favorable terms. It's not free money.
Okay.
It's borrowed money, but it's a little bit of a lower interest rate.
Gotcha.
Also, if you're a first-time home buyer and you do maybe a conventional loan, there are some features if you're a first-time home buyer.
What's conventional?
A conventional loan program is a very common loan program.
Okay.
So when we look at the most common loan programs, you're going to have conventional, FHA, VA, USDA.
Okay.
Broadly speaking, those are the big four.
Okay.
95% of the loans that anybody does are going to be one of those four programs.
Or cash.
Or cash. Right. So being a first-time home buyer has some benefits, but it's not a magic bullet solution to everything. It can't overcome bad credit. It can't overcome your debt-to-income ratio being out of line.
Yeah.
What it does do is it allows you to sometimes get 0.1 or 0.2 better interest rate than other options, or it might allow you to qualify for a state down payment assistance program.
Gotcha.
Right? Okay. So back to your initial question of if I want to buy or build my forever home, which program should I use? Broadly speaking, I would say if you're eligible for a VA home loan, VA is the answer.
Okay.
And why is that? No money down. There's no required down payment on a VA loan.
Yeah.
Additionally, you're going to get the best interest rate that's out there in the market today. That's always been true. Lastly, there's no mortgage insurance.
Is that huge?
It is big.
Okay.
You know, on a $300,000 or $400,000 house, that might be $200 a month. You know,
Okay.
so the first time home buyer thing is not a magic bullet. In that situation, I would say continue to use your VA loan.
Bounce it.
Now, here's a few things that a lot of people don't know about VA loans. A, you can carry more than one VA loan.
No, we didn't know that. Here we go.
At a time.
Okay.
Okay. I just did a loan for a guy for his third VA loan simultaneously. He already owns 2 other homes, both that have VA loans on them. And we're doing a third for him to buy his new residence.
No one tells us this, Jake.
That's
No
what
one
you have
tells
me here
us
for.
this. Okay, so I'll tell you what we're taught is you got your VA. Maybe if you're not using that as your main property after 2 years, you could be potentially eligible for a second VA, but that's not even the case because you can do these simultaneously. Maybe I guess what are the big things that people don't know or misconceptions about a VA home loan that maybe y'all veterans probably need to listen up?
Yeah. So a lot of people think that a VA home loan is really hard to get. A lot of people think that there's a ton of extra paperwork involved in them. They're not. They're actually easier to get approved than most other programs. The government gives us quite a bit of latitude in our approval of those loans. And there's no money down. There's no mortgage insurance. They're a great loan program to qualify for, and they're a pretty easy loan to get approved for, in my experience. So they're not all that difficult to get. That's the first misconception. The second is people think that you can only have one at a time, or maybe that you can only use it once, period. That's not true. You can have multiple VA loans at the same time. Now, there's some rules that go into that.
For sure.
We have to make sure you can carry the debt for the old house and the new house.
Gotcha.
We have to make sure that you have enough eligibility on your certificate of eligibility, that you served long enough, that you know that the VA will allow you to have more than one VA loan.
Gotcha.
But in my experience, it's kind of pass or fail. If you qualify for one VA loan, if you've got the income, we can get you in another one. The income's the hard part.
Got
right?
you.
And serving, being eligible to begin
Having
with.
the time.
That's right.
Correct.
That's right.
Tracking.
The hardest type of veteran to get a VA loan for are going to be Reserve and National Guard, because the time requirements for those are different.
Yep.
I think you have to serve for 6 years.
Yep.
I think it has to be during a period of war. So
Have some type of active duty status.
that's right. So I had a guy the other day that was in for like 4 or 5 years, and he wasn't quite at that 6-year mark. So we weren't able to get a certificate of eligibility for him.
You can just flex it and be like, "Nah, I'll vouch for him. He's good to go."
Right. Right. I wish I could. Additionally, I would say if you receive disability from the VA, you've got enough eligibility.
Oh, okay. I thought about to say makes it hard. I was like, dang.
If they're going to give you disability, then you've got enough eligibility to qualify.
We'll give you a house. You did what you had to do.
That's right. That's right.
Now, Jake, I do want to go a different route. So we talked about who you are. We talked about some of the pieces in the middle, and we may have some of those come up. But let's talk about your unconventional way of marketing.
Okay.
What I've seen here recently is obviously real estate agents are trying to do a new wave to really show themselves out there. But you're in a field that you've made mortgage interesting now because I've started to see your content. What made that jump to not be in a suit and tie and just be sitting behind a desk saying, "Hi, I'm Jake."
Yeah.
This.
So, I've always tried to be casual. I've always, tried to be myself, but we're in a very, my profession is very plain vanilla, old white guy in a suit sitting at a bank behind a desk from 9 to 5.
Yeah,
right?
Yeah.
And so, I've been lucky enough to work for companies that will allow me to be myself, jeans and a t-shirt 9 times out of 10 or something like that. Right. So that's the start, is just being casual and just kind of being myself.
Yeah.
Now I've been doing content since 2018 or so. And about 2 years ago, I did a 420 video about how, as an independent mortgage company, we can use marijuana dispensary income. Okay. So if you work at a marijuana dispensary as a clerk, a bank cannot use that income to qualify.
Okay.
Because they're federally regulated. Banks
Since marijuana is not federally legal.
That's right.
Tracking.
So they can't do it. As an independent mortgage company, we're regulated at a state level. Oh, here we go. So we're able to use that income. So I did a video of kind of that 70s show fog machine where, the camera goes around in a circle, and that thing took off.
Yeah.
And I still have people that ask me about that video. Now, it wasn't the best video ever made, but I was encouraged by that. And honestly, I was kind of emboldened by that. My wife was like, "Oh shit, here we go."
Yeah.
And so that kind of encouraged me to step out of my box a little bit, maybe cuss on camera every now and then, or just kind of be a little bit more myself.
Real, yeah.
Exactly. And so that's what we've tried to lean into.
I've also spied on you, and you used to do stuff even on a plane and all this good stuff. You fly? Are you pilot?
I am a pilot.
Okay.
Yep.
That's dope.
For fun.
Okay.
Yeah.
It's a soft flex. I fly a little bit. Yeah, I do hear that.
It's a lot of fun. I started flying in 2018. Got my pilot's license. Bought a little plane. Flown that all over the region, all over the country. Own a different plane now, and we take it on family vacations and take it on little trips here and there, and it's a ton of fun. I wish I had more time to fly. Working dad. I've got a family and a career and other stuff.
Got other stuff.
But it is definitely kind of my passion project.
Now, your goals on kind of like where you're merging to, are you planning on staying in mortgage, or what's your next thing? Or, I want to open up my own brokerage or whatever it is.
Yeah. So there's a point in mortgage at which, do you want to become a manager and have other LOs underneath you? Or do you want to continue to build production in your own personal name? Kind of like as an agent. Would you rather start doing 30, 40, 50 million on your own and have a kind of a team underneath you? Or would you rather be a broker and you just help other people do that, right?
Okay.
Well, the agent that produces 40 to 50 million out-earns everybody else.
Every time.
The same is true in mortgage.
Gotcha.
I want to continue to build my personal brand and my team of processors, assistants, LOs, kind of in my name.
Yeah.
Because production is leverage, right? I don't foresee getting into management really anytime soon. I enjoy what I do. I like being in the trenches. I spend a ton of time on the phone, a ton of time solving problems, and that's really where I'm best at.
That's fair.
And so, no, I just want to continue to grow my goals as far as production-related goals, and then I want to continue to diversify income streams elsewhere.
Yeah.
The downside to being an agent, the downside to being an LO, we get paid on loans that we do today.
Okay.
We don't get. I don't get paid next month unless I do loans next month.
Dang.
So
if you
it's
don't work,
transactional, right?
Yeah.
We're always having to do more loans, which is good and great when you're good at it.
Yeah.
But I don't want to do that forever.
Yeah.
Right. And so buy some property, buy some real estate. Find other things to do. Find ways to leverage the income that I'm earning now to be able to stop doing loans at some point
For sure.
in the future, right?
Heard that. Is this one of those businesses where you can like slide something over to somebody? Like, let's say you got a homie that, oh yeah, I want to be on Jake's team, and now, like I guess like insurance, giving someone a book of business. Is that a same thing in mortgage or not necessarily?
It's not as prevalent because we don't have trailing commissions. So like an insurance agent gets paid based on renewals, right? So every year that insurance policy renews, that agent's getting paid something on it. Ours is kind of it's very transactional. You get paid once on every loan you do, right? Now that client comes back to you and does another loan, you get paid on that again.
Each time.
So I think I've heard of people that sell their phones, that sell their phone numbers. You hear my phone ringing over there?
Yeah.
That's where the money's made.
Got you.
Right? So if I want to retire one day, maybe I can. I've heard of LOs basically giving their phone to somebody and saying, okay, pay me 25% of what comes on that phone.
Yeah.
For a 3-year period or whatever.
That's clever.
So that's one way to do it. Another way to do it, similar to owning a business, is to slowly back yourself out of the daily operations of the business.
Gotcha.
So that, the Jake Arey mortgage team is still doing loans 10 years from now, but maybe I'm not the one answering the phone.
Tracking.
Right. So there's kind of a few ways to get there. But ultimately you have to continue to do loans, and somebody's got to do those loans.
Exactly. Now, Jake, here's the part that I'm sure you and I will have a lot of fun about. This last part is going to be dealing with both of our clients who we deal with stuff the most, and that's real estate agents. And I don't want you to hold back, Jake. I don't want you to hold back at all. I'm going to start you off with...
in trouble, bro?
No, not yet. Not yet. So we're going to start off really simple. So with dealing with agents, you and I have both seen great agents. What makes a great agent on your side, I'm not necessarily sure, but for me, if we get to a home and the house is already ready to capture and rock and roll, cool. We're good to go. We don't have to worry about doing anything extra. Great agent, solid. Not sure how much goes on your end, but what's one thing you think an agent can do, not necessarily to make your life better, because everybody has their own people they need to care for, but what have you seen that agents could be maybe implementing or doing that may make Jake's life easier, to where you don't be like, ugh, 8%.
Yeah. Send me a client and get out of the way.
Okay.
Right? Let me do my thing. An agent should not be telling you about lighting and about camera settings.
True.
Drone angles, camera angles, right? They hire you to go take care of that.
Right.
You are best when they open the door
and get out the way.
Let you do your thing, right?
Right.
Send me a client, make sure that we've gotten in touch with them, and then let me take them through our process, right? You're sending them to us for a reason. That's because we have a reputation of doing a good job for everybody involved.
Yeah.
Let me do my thing, Follow up, when you want to.
Yeah.
Sure. But, don't get in the weeds with them about what type of loan program they're in because you think you know how to advise them through that. They're not licensed to do that, right? That there are so many factors and details that go into this mortgage lending process that you have to be in the weeds to really know how to advise people through that.
Yeah.
Now, there are agents out there that know enough to be dangerous.
Okay.
There are agents out there that do provide valuable feedback and valuable information, right? But there comes a point, at which,
Still gotta get shifted to somebody.
let me do what we need to do.
Yeah.
Right. So there's a fine line of a group effort and making sure we're on the same page and stepping on toes. I have a lot of agents that do a really good job of giving me context as to, hey, the client said, he's working on his credit score and he's self-employed, by the way. And he and his partner aren't married yet.
Yeah.
I don't know if any of that matters, but take that information and run with it. Right. There are agents that can provide us with valuable feedback and can help us through this process. But then there are some agents that honestly make things more difficult.
Gotcha.
Right.
One more in this vein. So you mentioned that, hey, if it's not your wheelhouse, just shift it over to Jake. But let's just say it comes up in conversation. How much information, or should they just altogether be like, you know what, let me just get you into, obviously they have to do the three, I suppose. They have to do the three recommendations. But, let's say they say, hey, but Jake's who I would use. Let's say they shift however they need to. How much information would you say they should even push at all, or how much should they give to be to give them enough information to be able to make their conversation with you useful, or if anything, hey, talk to Jake?
I think it depends on the agent and it depends on the client.
Okay.
Some clients are going to want to know, well, what's his rate? Well, where's his office? Does he do VA loans? How many VA loans does he do? Right. So each client is going to be a little bit different in that regard. I think the biggest thing they can tell the client is, look, Jake's going to be honest, accurate, and thorough. Right. If anybody can do it, these guys can do it. And if they tell you that it's good, it's good.
Gotcha.
That's the biggest compliment that we can really receive.
Yeah.
If they say, hey, I've been working with Jake and his team for several years now, they have never let us down. That's perfect.
Just let me have it.
Let me have it.
Heard that.
Put us in touch, have the client call us, let us call them, whatever's best, and we'll take it from there.
Gotcha. Now, final question, Jake. With this being a entrepreneurial-based, just get any information type of podcast, you hit on one thing that I was going to end it with, but it is for folks that are self-employed. What options do they have? What could they do to really set themselves up for success if they do want to buy a home and all the things that they probably need to be mindful of?
The biggest thing with people that are self-employed is we have to use the income that is shown on their tax return that they claim they made to the IRS.
Okay.
So let me use easy math real quick. Let's say you're a business owner and you brought in $100,000 in revenue last year. That's the $100,000 top line item.
Okay.
And then you say it cost me $50,000 in expenses. So my net income was $50,000. The $50,000 net income number is what we have to use to qualify the client with.
Track it.
Right?
Okay.
So if you plan on buying a house anytime soon, don't write off all of your income. Right?
Right.
I had a guy that told me he made $300,000 last year. I got his tax return. He made $6,000 in a year on paper.
Dang.
That's what we're left with.
Yeah.
Right? So I have some people that are self-employed that every 3 or 4 or 5 years, they're going to want to buy a house or build a house. So we need to plan ahead for that. When we do a home loan for you as a self-employed borrower, we're going to look at either 1 or 2 years of federal tax returns.
Okay.
So in 2025, right now, if you were to buy a house, I would need to get your 2024 and 2023 tax returns.
For the year that I'm in as a self-employed.
Right.
Gotcha.
So that means that when you filed your 23 and 24 tax returns, in a perfect world, we would have kind of been planning ahead for that.
Gotcha.
So if you plan on buying a house anytime soon, consult with a local mortgage guy about what income you might need to earn on paper to be able to do what you're looking to do. We can give you a decent estimate.
I was about to ask, is that easy of an equation?
It is. It is. Yeah, it's just a math problem.
Okay.
When we look at a mortgage, we look at 3 main categories of things: credit, debt to income, and then assets.
Gotcha.
Which is basically cash.
Okay.
Your debt to income ratio is your monthly income pre-tax put against whatever debt payments you have plus the house payment. So if you call me and you say, hey, we're self-employed, we want to buy a $400,000 house, and these are how much my car payments are, or these are how much my debt payments are.
Okay.
I can write those numbers down, do some quick math, and say, I think we need to be earning X amount per month, right?
In your pocket, not the business. This is our net track.
What you pay taxes on, what you claim to the IRS.
Got you.
So we can plan ahead for that. So just try to, as a self-employed borrower, plan ahead.
Okay.
Talk with a trusted mortgage professional, ideally somebody local, so that we're reputable, right? And given really enough time to plan ahead, we can make that happen. So if you're self-employed now and you say, I want to build a house in 2 years, or I want to build or buy a house in 2 years, we can try to collect some information from you and work out a rough plan of, okay, the next year we need to claim X amount of income.
Because this is what we're striving towards for anyway.
When you're self-employed, it's a little bit more complicated because we're using income documents from the past, right? We have to use, depending on the file, 1 or 2 years of federal tax returns.
Okay.
I'll blow your mind real quick. I mentioned earlier that we primarily are going to do one of 4 loan programs, conventional, USDA, VA, or FHA. Now that I work for a non-bank, now that I work for an independent mortgage company, we have loan programs that we would consider non-standard loan programs.
I got to show my toes or something.
That's right. That's right. Plus some.
Yeah.
So we have a program that we call the bank statement loan.
Okay.
It does not require tax returns at all. We just get your bank statements for the last 12 months, and we figure out what your income is based on that.
Okay.
Right. So let's say that you are the guy that wrote off all your income and you claimed $6,000 a year last year, but your bank statements show you've been getting $30,000 a month put in your bank account.
Yeah.
Bet. Let's get 12 months of bank statements. We'll pre-approve you for a bank statement loan.
Okay.
You're going to pay a quarter point, half a point higher in interest rate.
Gotcha.
But we're going to be able to get you closed on a home loan.
Dang.
Right? So there are some extra kind of non-standard loan programs that we have access to.
Yeah.
That are really, really cool. And I'm really starting to kind of learn my way around those and through those to it's a tool, right? It's a tool.
That's so clutch to hear, because I mean, I would almost, so in my instance now, I'm obviously still in the military. I passed the 6-year gap and I'm using a VA now. So with me now being self-employed, what route would I naturally go? Or do I just continue, for me personally, just keep doing my VA thing?
Yeah, okay. I would probably keep doing your VA thing.
Okay.
Right. Now, there's always pros and cons. So the bank statement loan, you got to have 20% down.
Oh, dang. Okay.
Right. So
on whatever house you're wanting to get. Track.
So if you're going to buy a $300,000 house using a bank statement loan, you're going to need 20% of $300,000. So if that's an option and you need to buy a house, your wife's got to have it, let's do it. Right. If not, we'll keep working on it. So somebody that's self-employed in your case, if you don't plan on buying a house in the next couple of years, then it doesn't really matter.
Okay.
But if you think you're going to buy another house or a different house at some point in the next few years, then we should be careful of how much of your income we write off, right? We need to show a reasonable wage,
right?
So that we don't shoot ourselves in the foot 2 years from now when we try to buy a house.
Well, some of these things that you're doing would you say we need to ensure that we have a good CPA, or is that kind of like where you?
A good CPA is important.
Okay.
Definitely. Somebody that answers the phone, right?
Yeah.
That's surprisingly hard to find in a good CPA. The good ones are going to be busy, but a good CPA is helpful. There are some things that there are some expenses on your tax return as somebody that's self-employed that we can do what we call as add back. So I'll give you an example. Depreciation. Depreciation is a line item on your tax return that you can claim as an expense.
Like my company vehicle.
Company vehicle.
Okay.
So let's say you write off $30,000 of depreciation on a company vehicle in a given year.
Mm-hmm.
We can add that back as income.
Ooh.
So you claimed $6,000 a year in income and 30 grand in depreciation. We can add those two together. Now we've got 36 grand. Right. So strategically, we can work with a CPA to lower your tax liability while also not robbing your file of all of the usable income.
Right.
There's a happy line there. There's a happy medium there. There's a balance of some kind that we need to find.
Yeah.
If you're going to buy a house at some point in the future.
It seems like this is so much strategy based, and I see why you said now each client is so different on how you would kind of navigate their process. And I could also see why you tell agents to chill out on even, hey, let me do my thing, because there's so much you just don't know when it comes to mortgage.
Thomas today is a different client than Thomas 2 years ago.
Yeah.
Right?
Yeah.
And Thomas 2 years from now is a different client than both of the other ones.
Yeah.
Right? There are so many factors that go into this process.
Mm-hmm.
My favorite question is somebody that calls and they say, hey, my name's, John, what's y'all's rate today? Hell if I know. What are you trying to do?
Yeah.
There are so many factors that go in, anywhere from 5% to 10%,
Mm-hmm.
I mean, there's no easy answer to that question.
So what is it so I guess what should the question be then?
Sure. Okay. The question should be, hey, my wife and I want to look at buying a house.
Mm-hmm.
This is the house we want to buy. What do you need from us? I need to collect a loan application from you.
Gotcha.
I need to collect income documents from you. I need to get my own x-ray of your file. Once I have that, it's pretty easy for us to take a look and see, we can get you qualified for the price range you want to be in.
Mm-hmm.
This is how we do that, right? And then from there, we dive into more and more details. So this is kind of a cheesy, example that I've used in the past couple of months, but buying a house and starting the home buying process, I look at it as a funnel, okay? The widest up top, and it gets more narrow as you go down.
Mm-hmm.
That first phone call, neither of us know any details that we really need to know.
Right.
I just know you want to buy a house. I don't know credit, income, debt, bank account balances. I don't know any of that.
Mm-hmm.
So as we collect information and as we work through the next couple of business days to verify information and figure out your situation, we're going to continue to narrow in on exactly what we can do.
Yeah.
And then ultimately, what's that exact rate? What's that exact pre-approval amount? What's that exact house payment?
Mm-hmm.
Right? There's a lot of stuff we need to figure out before we can answer those questions.
Dang. Jake, I tell you what, boom, cool. We got about 2 more minutes. Now, this is the part kind of like where you kind of discuss and kind of highlight where folks can find you, where folks need to be looking at you. Do you even want more business? I know you're transactional based, but you may not want business, or maybe you want to do more of the foot loans. I don't know. Ooh, Jake, let's go real left field real quick. I do OF. Does this qualify me to do that same thing, or would that put me in a self-employment?
Yeah. Okay. So you're a content creator.
Mm-hmm.
You're a subcontractor.
Okay.
We need tax returns for that, or we need to do a bank statement loan.
Okay.
Assuming we need the income, right? If you do OF on the side and you've got a full-time salary position, we might not even need that income.
Okay.
Now, regardless, we can use the OF money as your down payment.
Tracking in case you need the 3 or the 20.
Right.
Okay.
Right. I mean, we can use it for cash for a down payment or something, but we may or may not be able to use it for income depending on how long you've been earning that type of income. Right.
Okay.
So we've done loans for clients that work for that site or similar sites.
Yeah.
They're subcontractors.
Okay.
Right. Same with those that might work on a more of an in-person entertainment.
Okay.
Like the establishment over on Highway on I-30, Peppermint, whatever.
Yeah, whatever. We don't even know it.
Subcontractors, self-employed.
So what is it? Am I getting something from my employer? Like, especially if it's like loose cash. Let's just say you're in a high cash. Yeah. Obviously, like the dispensary is a little bit different.
Right.
But how am I justifying? Hey, Jake, here's all the cash I made on April 1st.
So there's a difference. There's a difference in income and assets. Okay.
Okay.
So can we use your cash income as income for the loan, income for repayment? Can we use that to show you can buy a $300,000 house? That depends on if it's taxable income, if it's on your tax return, or if we can do a bank statement loan, right? And then the other side of that is, if you've got money in your bank account or you've got cash in a safe, we can most of the time find a way to use that as your down payment. Okay. So there might be money that you earn that we can put to work during this transaction that will help, but it may or may not be able to be used as qualifying income to qualify to buy the house. Does that make sense?
So you still need to have another thing that y'all can utilize, like taxable income, to be able to justify us giving you the mortgage. But for down payment, it's where we can get creative and use these other.
That's right.
Tracking.
So generally, if you're a W-2 position, salary, hourly, that's easy.
Okay.
We don't even spend time on that. We can use that income all day.
Gotcha.
Where it gets tricky is when it's self-employed income, subcontractor income. Okay. So in general, you're going to have to be self-employed in that line of work for at least 12 months for any option, because we have to show a track record, right? Self-employment income can vary wildly. So we need a decent track record so that we can see if that's sustainable and what amount of income we can rely on.
Yeah.
So we need 12 months or more, and we need to verify that income, either the bank statement loan or 1 or 2 years of federal tax returns.
Okay.
Right? So if you just started doing OF work 3 months ago, we can't use that as income.
But I'm killing it, Jacob. Look at all this money.
But the cash counts for something. We can use that for your down payment.
Got you. Okay. Even though that's tracked electronically, let's go more traditional. Let's go to the thing that Ronald Reagan had started. For those who they're too young to know what his whole thing was. So let's say I'm in that line of work, and it's very much cash heavy.
Sure.
What can I do? I'm under the same precinct? I'm just cash heavy, and I have to put it in the bank, or what can I do in that line of work?
So it depends on what we're trying to use that cash for.
I want to buy my house, Jake.
Okay. So then ideally that money's going into a bank statement, into a bank account.
Ideally, you want it to go. Okay.
Right. Ideally, that to use it as income, we have to be able to verify it.
Okay.
We have to be able to verify it.
I'm showing you it.
Yeah. Is it in cash or is it in a bank statement?
In cash.
Can't use it for income.
Okay.
Now, if you have a bunch of cash in a safe and we need that cash for a down payment, we can put that cash in a bank account slowly, or that cash can maybe be gifted to you.
Here we go.
From a family member.
Okay.
As an appropriate gift source.
Tracking.
There's always ways around it.
Yeah, I like that.
Right?
I like that. So in the instance that I am a cash heavy business, however you need to be gifted the money, I'm trying to make sure I don't get you hemmed up. However you need to be gifted it, you need to be gifted it to be as income.
And so the gift will work as assets. Income, income is, we've got to be able to verify it.
But you can use assets or income for approval for my mortgage. Tracking.
There's, I hate to sound like a broken record. There's so many variables here. There's a lot of ways to skin a cat. We have a loan program that's called asset depletion, which is where, let's say you have $1 million in the bank, but you don't have a job.
Okay.
A bank is not going to give you a loan for that. You're not going to qualify to buy a house for that because you don't have monthly reoccurring income. Okay. Now, as an independent mortgage company, we have bank statement loans, other types of loans. One of those loans we have is called an asset depletion loan, where we say, bro's got $1 million in the bank.
Right.
And there's a formula we can use to divide that out and say, oh, now we've got $20,000 a month of income we can use to qualify you on. So depending on the cash business, maybe we go that route.
Okay. That is dope. I'm going to be honest, man.
It's a puzzle, bro.
Dude.
Every puzzle's different, but every client is a puzzle. And here's the frustrating part. People hide shit from us, right? It's like, why would you lie to your therapist?
Hide debt.
Anything.
Okay.
Debt, income, fiancés, cash, any of it. Don't lie to your therapist. Don't lie to your attorney.
Right.
Don't lie to your mortgage guy.
Yeah.
I can't help you solve the problem if you don't tell me what the problem is, right? You have to lay it out there for me.
Yeah.
Don't hide shit, because then it's going to come up in a way in which it's too late, right? The key is to work around it, not through it with brute force.
Right.
You know?
Let me know about it so I can go ahead and tiptoe and
fix it.
Gotcha. If they are laying it out, more than likely that's probably how they're making their cash, Jake. So you're probably right. Just go ahead and lay it all the way out.
Man, there's a lot of there's a lot of situations. I had a lady in the summer that had quit her job like 45 days into this home buying process.
Ew.
And never told me. Well, within 3 days of closing, we have to do a final verification of employment. So we were trucking right along for weeks.
Yeah.
And then right before closing, the week of closing, her employer came back and said, hey, she's no longer with us. She left in May. And we're like, son of a bitch, you know? Well, so I called her and she was like, oh yeah, well, I didn't think you'd learn about that, but I got another job. Here's my other pay stub.
Does that help? Or, this is the going around versus through.
Now everybody's got to hustle. We've got to re-verify employment. We've got to reapprove the loan. We've got to do all of these other things that we could have been doing over the last couple of weeks if you had just told me, hey, I got fired. I've got a new job now. Don't be embarrassed by it, right? We're going to find out. I promise.
Regardless.
Promise we're going to find out. Just tell me.
Yeah.
And I can help you fix it.
Okay, bet. And one thing I've always been told, if you've already started a process to get a mortgage, you're not supposed to go buy a car, don't buy furniture. Hell, don't buy bread. Can you explain maybe what's happening if I am doing those things?
Yeah, sure. Okay. So let's say today we get you pre-approved for a home loan. We're going to look at those three main things: credit, debt to income, assets. Those are the three primary things we look at. We're basically going to take a snapshot of your credit and your debt to income today. Okay. Debt to income is just a math problem.
Gotcha.
It's your income versus your debt.
Okay.
If that math problem changes, your approval changes.
Gotcha.
If you just added $400 a month for a new car payment, that might make a difference in how much house you can qualify for.
Yeah.
Right? So the main piece of advice there is just ask. Okay. Hey man, you just got me pre-approved yesterday. My car just crapped out on me. I need to go buy another car. What do I do here?
Gotcha.
We'll figure it out. You know? Some files are more sensitive than others. I have a lot of clients that can just go buy a new car. We add the $400 a month on their debt to income ratio. Doesn't matter.
Gotcha.
Other clients, $385 will work, but $400 will not.
Ooh, okay.
Right? So if you'll just ask us, tell us the problem, I can give you an answer to it.
Yeah.
Right? So ideally, especially once you're under contract on a house, don't change jobs. Don't take out new debt. A good example of that is people all the time go to Lowe's to buy appliances the week of closing, right?
Ooh,
now they open up a new credit card to get 15% off the $800 in washers and dryers.
Yeah.
You can put it on your existing credit card. That's fine.
Okay.
But don't open up a new credit card for that. Do not open new debt during the home buying process.
Tracking.
And do not change your job.
I'm tracking that.
And again, unless you ask.
Right.
Right.
I wouldn't even thought to even telling you that and now knowing, oh yeah, you can buy a new car, but it needs to be under XYZ and you'll still be good to go. Is there a new paperwork that happens behind the scenes, or is that so you can avoid doing new paperwork and stuff?
So there's some variables that go into that answer, but
yeah, everything's variable.
Man, it's good because it gives me an out on everything. Right?
Okay.
It depends. Okay, so let's say that you're under contract on a house and we're going to close on it in 3 weeks, and you buy a new vehicle.
Okay.
In most cases, we're going to have to say, Thomas traded this car loan and put another car loan on his credit, right? He paid off the GM Financial. Now he's got a new one with Volvo.
Gotcha.
Right? So we're going to have to get the paperwork from the dealership and show this is how that old loan got paid off. And now this is how much he owes, and this is the car payment on the new one.
Tracking.
That might take 2 or 3 days to do from when we get the paperwork from you.
Yeah.
The trick is letting me do that as early as I can. If you hide it from me and we find out 4 days prior to closing,
Now we got issues.
now probably get it done, but it's going to be stressful. Your wife's going to want to schedule closing. I'm going to say, well, we've got to wait to schedule closing until I get this shit fixed because y'all went and bought a new car. Just tell us about it beforehand, ask, and we'll find a solution for you, you know? And we're not the only ones that do that. There's a handful, half a dozen good lenders in Central Arkansas, that I trust, that we all send deals back and forth. Maybe I have something that I can't do that so-and-so at a different bank can do. We'll send it over there. We want to take best care of the client.
Right.
If you have a client that's trying to shoot a video in Jonesboro, you might not want to drive all the way up there to do it. You're going to send it to your boy who does a good job.
Exactly.
That's a better fit for them, right? Yeah. What's good for them long-term is good for us long-term.
Absolutely.
And so, we've got to shoot people straight and just give them the answer that they need to hear.
Versus what they want. Absolutely.
That's right.
Jake, this has been dope, bro. Where can folks find you, come and fly with you, and have you do they home stuff? Where can folks check you out at?
Yeah. So Instagram, Facebook. I haven't gotten on TikTok yet, which I should. Jake Arey, JakeArey, Jake Arey Mortgage Team. My website's jakearey.com. You can apply online. You can book a discovery call right there where we can talk about whatever you want to talk about. Pick your own day and time for that. And people can call me or text me. My cell phone number is the number that's sitting right over there, 501-326-2700.
Bet. Is there anything you don't do, or I guess what's an ideal situation for you? First time, 15th time, or you take it all?
Any and all. If there's a house on the property, if you're thinking about buying or building a house, we want to hear from you.
Okay.
If it's not a good fit for us, we'll find a good fit for you. Bet. I send stuff to other friends or other companies all the time.
Okay.
And we just want to find the best fit that best fits their needs. So just call me, and if we don't do it, we'll find somebody that does.
And then lastly, what areas do you service? Does it even have to matter? Does it matter?
Yeah, so I'm licensed in the state of Arkansas.
Okay.
So anything in Arkansas is the easy answer.
Gotcha.
We have ways to do loans for any state that touch Arkansas. Texas, Louisiana, Oklahoma, Tennessee, Mississippi. We do some other states as well, but this is kind of really our footprint. Yep. So anywhere in Arkansas is the easy answer, but broadly we do some other areas as well.
Bet. Yeah. I want y'all to be mindful of something when it comes to, we having friends on site. A lot of people don't want to go to college, or a lot of people don't have the knowledge to go get these finance degrees. And I'm not a finance guy, but I tell you what I am great at, instilling. So when we bring friends on, that's the best way to do it. Why not bring somebody on that already has the information, and then we give it to you for free? That's kind of like the whole mantra. But before you dip, I want to make sure all his stuff is down in the show notes, and you do the things that your mama told you to do, like the liking, the subscribing, and all that good stuff. So if you got any more questions or informations, feel free to let us know down in the comments, and we'll see you on the next one. Peace.